At times, perception can actually be more powerful than reality for many investors. At the end of a day, you get home from work, you turn on the TV and you see the market's down 100 or 200 points, and you begin to think, oh my goodness, has my portfolio down that much? But in reality, it's only a couple of investments that were down and actually took down the market. Most of the investments that day were actually higher, but the perception is we all lost money or things are very, very negative. Company specific, you could have a situation where a company is in the media or I guess being highlighted for all the wrong reasons, and yet the underlying fundamentals are very good. The stock gets sold off because all people hear is all the negative about this company, yet because the fundamentals are so strong, once that, I guess, perceived negativity kind of dissolves away, the underlying fundamentals are so strong that the stock starts to rise again. We've seen this time and time again. So in many instances, individual investors can actually be fooled by what they perceive to be what's happening, when in reality, underneath it all, the situation could be totally different. We could perceive a situation as being very good or very poor, when in reality, it is actually the opposite. On more of a company-specific situation, take a look at Facebook over the past year. It's been in the media for all the wrong reasons. Information, access to information, selling of information, all the things that Facebook has recently been penalized for. So what happened to the stock? Well, it went from a high of about $218 all the way down into the low 100s, $125, $130. Investors began to sell off the stock because they believed things were very poor. Negative perception. When in fact, the reality of the situation was, even though all of this was going on in the media, the underlying fundamentals of the company were still strong. As the company reported quarterly earnings over the past few quarters, investors start to see that this company continue to do well, continue to gain market share, continue to gain more clientele. I believe it's the role of the investment advisor to make sure that the investor stays on the right path, making sure that perception is not more powerful than reality. Often at times, savvy investment advisors can actually take advantage of those that have or make decisions based on perception versus reality. If an investment were to fall for general reasons or that are based on perception, but the underlying fundamentals are strong, I think that's the time when you can find really good bargains. These are investments that tend to rise over time because at some point down the road, individual investors will focus on the underlying fundamentals. And if they're good, this is the recipe for success. If you like what you heard, please subscribe to my channel and click on the notification bell.